It's Quant Trade Edge. It's Sunday evening, and I wanted to go over a trade that we had in our Discord on Friday. So this is the NASDAQ, and you can see that the overnight range was fairly tight, and it was pretty much set between 1:30 a.m. and 4:30 a.m. And that's pretty much your European open time, right? 2 o'clock is the official open in London, and then this low was made in there. Now that's a relatively small area, 18,163 down to, call it 18,030. So 130 points is about 0.7%. And, so when you have a nice tight range like that, a well-defined range from the European session, in the U.S. session, a breakout from that range, is a go with. So here, we broke from that range when we got news on preliminary GDP at 9 a.m. We broke out there, it kind of came back to retest and never looked back. From this level here, you're talking about 18,163. We got as high as 18,372, so about 209 points. In this one direction. This is on a 5-minute chart. If you look at it on a 15, there's even less noise. From the time you broke out, you had this little pullback here, but then pretty much a straight up move. So, there's a couple of ways you can set up for this. You obviously buy stop at that area, but where do you put your stop? On the 5-minute chart, if you were trailing your 5-minute bars initially, that kept you in past this danger zone. But another thing that we do, if you're familiar with the Forex trade, you typically do it after you take out a previous day high or a previous day low. But more recently, we've been looking at things like previous week high, previous week low, and really just any significant point. So, for example, this European range, was a significant point. And, if trading were easy, as soon as you took that out, you would vacuum straight up, in which case you could just do infinite leverage on a breakout and trading would be too easy, right? So what actually happens nowadays is when you take out a key area, you get a bit of volatility. And I'll call this here that bit of volatility. This is the volatility. This bar technically broke it, and you pulled back all the way to here. You have this up down, and this volatility, I would say about 70% of the time, comes in the form of an ABC. And so that's why we focus on ABCs. After we test a very significant area, to then give us a limited amount of risk. So, on a 5-minute chart, you had this ABC here, but that actually gave you a fairly decent sized risk bar. It's not bad, about 40 points. Considering we went 200 points from there, you still got a 5-to-1 risk reward on that. But we're kind of spoiled. We'd like to have even tighter risk parameter, and what we had been monitoring in our Discord was 2 minutes, 2-minute ABCs, and you'll notice there was actually a 2-minute ABC before the news break, and that was actually mentioned by one of our members. I didn't actually have my eye on it, but that actually helped me get into it. So I was based on this impulse and this ABC, and then I actually had a profit target ahead of this breakout, but then I also had the breakout trade set, so there were a lot of dings after the GDP news came out. But you'll see after we had that, this was a one-legged pullback, but then here we had a very clean two-legged ABC, and this would have given us a very tight risk parameter here. This bar was about 21 points. So, the 5R that we had before is really 10R now. So that's a pretty amazing risk to reward to get in one day, 10 times your risk. see if I can draw this so you can visualize it. There you go. So this was your 21-point risk, and this is your roughly 200-point gain from that. And even if you missed that, the 2-minute chart presented a number of ABCs throughout the day. You know, this ended up being a trend day, and there were several more opportunities to get in. From this peak here at 10:20, which is close to your European close, you had this clean ABC. So again, you could have reset with another tight risk bar. And this risk bar was about 17 points. And there was about 130 points left in the trade. So, and I believe there were even more. There we go. Here's one right here from 1136. This up, down, up. This low was 62.75. This low was 60. Okay, so I guess this C did not exceed A. That may not have been a one that we would have taken. And you know, from an Elliott wave standpoint, C's don't need to exceed A. I just like it that way, so you're not trapped into. I think they perform better when the C exceeds the A. The rally isn't better from there, but the success rate is better, and to me that's worth having that extra parameter there. Oh, here was the other ABC. This one right here, just one bar up, one bar down, and this would have given you a very tight bar of 8 points, less than 8 points. So you know, sometimes, you know, even if you were to get in early before the actual trade or get in on the actual trade, sometimes a subsequent setup just based on the size of the risk bar could end up giving you a higher risk to reward. So here, call this 8 points from 230 to 370, 140 points off of 8. Is almost 20 to 1. It's like 16, 17 to 1, which is better than the original entry, which ended up being 10 to 1. So that's another reason to keep watching for secondary entries, because if they occur on a very tight risk bar, that can give you a better return. And again, our goal isn't how many points did we catch. Our goal isn't wow, I got into the trade early. I got in the trade before the news. You know, bragging rights don't count for much in trading. What you really want is the highest risk to reward. And if you had missed the ABC before the news, if you were, if the news was too volatile and you didn't want to trade around the news, if you missed this ABC, that's fine. If you caught this one ABC from here to here, was about 16 times your risk. And that was actually a better return on your risk than any of the previous patterns. So anyway, just keep your eye out for that. Again, the trigger for this was a tight, well-defined European range, and then we broke out from that range. We essentially had a trend day, which does mean that we're likely to test above this high. So this high is 18,373, call it. Only about 13 points away from that, so I'm sure we'll get that. But yeah, anyway, just another way to look at the Forex trade. The Forex trade really just is looking for a significant level to be pierced, and then a bit of volatility, which usually takes the form of an ABC, and that gives you a tight risk bar on which to enter and capture asymmetric profits.